What do we mean by stocks or shares or equity? Take 30 seconds to write down your answer. Okay, good answer. Investment in a company without starting business. Okay. A good definition. Stock is a security. So one of the students has answered, stock is a security that represents the ownership of a fraction of a corporation. Okay. It's investment for the business, investment in a company without starting a business. Equity is a value of shares issued by a corporation. Okay, good. Good answers. See, why are we calling the same financial product with three different names? By three different names. That is stocks, shares, and equity. Okay, that is one thing which we need to understand. Another thing is, what do we mean by it? See what happens whenever let's start from the answer which is given by a student, that investment in a company without starting a business. So the question here is, why should we look forward to investment into making investments into stocks of a company? What benefit are we going to get out of such sort of investment? And what do we mean by stocks actually? Stocks or shares? So first of all, see, whenever we want to invest into a particular company, how are we going to invest into that? So let's say if we know somebody personally, so what we can do, we can give some amount of money to that individual. Okay, let's say one of my friend is going to start up a business. So this individual is looking for some investments. That is, the individual has a requirement. My friend has a requirement of, let's say, 20 lakh rupees to start up his business. Okay. Now, I myself have around 10 lakh rupees, which are lying idle in my savings account or maybe in some other investment products. Okay. Now what happens? This friend comes to me that I'm falling short of 10 lakh rupees. Do you have that much amount of money? If you will give me that much amount of money, I will pay you something in return, or maybe make you a partner in my business. You don't have to run my business. You don't have to do anything. You don't have to manage the operations of the company. But still, whatever profit I'm going to make out of the company operations, that is by selling the products or maybe the services of the company, then I will be sharing that profit with you. So let's say the total investment to start up the business is 20 lakh rupees. My friend is investing 10 lakh rupees from his pocket and has asked me to invest 10 lakh rupees from my pocket, right? Right? Just a second. Right. So 10 lakh will be going out of my pocket, 10 lakh will be going out of his pocket. So I will be having 50% ownership of the company. Okay. So if I use another term for this, so I will say that I will be having 50% share in the ownership of the company. since I have a share, that is, I am part owner of the company. So which is why we are through this sort of investment, which is why we are using the term shares for this particular financial instrument. Okay, so the generic term which can be used for all of these investments, that is stocks, bonds, derivatives, mutual funds, insurance, all of these, we can use a generic term that is called financial instrument. Okay, so the financial instrument here is the shares. Since I'm getting a share in the ownership of the company through this very investment, so because of that, I'm going to use the term share to you can say represent this particular financial instrument or identify this particular financial instrument. Okay, that's one thing. Now let's say the company is divided into, let's suppose 100 parts. Okay, so this 20 lakh rupees of my friend's investment, total investment, this is divided into 10 parts. Okay, so by 10 parts I mean that is 20 lakh divided by 10 is going to give me one part will be 2 lakh rupees. The value of one part will be 2 lakh rupees. 20 lakh divided by 10. Okay, so now let's suppose there is somebody else who comes from outside. Let's suppose Mithun comes from outside and he says that I have, let's say, 5 lakh rupees and I want to invest in your company. Okay, so now what happens? Mithun will be giving us 5 lakh rupees in the company. Okay, now the calculation is a little more complex, but just to keep the things simpler for you to understand, let us assume that this 5 lakh rupee will be absorbed in the company, will be invested by Mithun in the company. Now what happens? 5 lakh rupees, or maybe Mithun has 6 lakh rupees, let's say, to keep the things calculation simpler. So he has invested, he has given us 6 lakh rupees. Now what happens? There are 10 parts. One part of 2 lakh rupees. So by investing 6 lakh rupees in the company, Mithun will be buying 3 parts of the company. And if I replace this word parts, I can say he will be buying 3 shares of the company. One share will be valued at 2 lakh rupees. Okay, so now Mithun will also become part owner of the company, or we can say Mithun will also become a shareholder of the company. Okay, now what happens? Mithun will be having 3 shares. The remaining 7 shares will be divided among us. That is the previous 2 partners. Okay, like that. Now, since Mithun has 3 shares. So in general, if I have accumulated some, you can say some product or item in let's suppose in my store, I have 10 bags of wheat grain. Okay. If I have in my store 10 bags of wheat grain, so I will say that I have a stock of 10 bags of wheat grain. When I get something in volume, that is in numbers, in multiple numbers, I can always call that as a stock of that particular item of product. So here exactly in shares also, since I am buying multiple number of shares, so I can say I have a stock of 3 shares of the company. Okay, which is why many a times shares are also you can say called stocks of a company, because always what happens, we buy multiple shares of company. So since I'm stocking, since I'm piling up the quantity in my demat account, okay, so because of that, what I'm calling it, I am stocking up these shares of the company. So which is why I can call them stocks also. Okay, now the third thing is the third term is equity. Now since we have done the calculation that one share of this ABC company, which we are discussing as of now at present, this company has 10 shares, and one share is having a value of 2 lakh rupees. Every share, all of these 10 shares have equal value. So whenever we find out or figure out the try to calculate the value of the shares, it never ever happens and will never ever happen that half of the shares or maybe a fraction of the shares of a company, let's say ABC Limited company, will be valued at 50 rupees, and another half of the shares of the company or maybe a certain percentage of the shares of the company will be valued at, let's suppose, 60 rupees. That will not happen because the calculation doesn't go like that. Okay, so every single share, doesn't matter we have 100 shares of a company, the total value of the company is divided into 100 shares, or maybe it is divided into 1 crore shares, doesn't matter. What matters is that every single share of the company will be having equal value. All right, so which is why we are also using the term equity for this. All right, we are also using the term equity for this. Okay, so I hope the terms are clear. I hope the concept of equity, shares, and stocks is clear.